Are markets rising fast? Are stocks dipping? If you want to learn how to read share market trends today, I'll break it down in a way anyone can understand. Investing tips, trend trading, market. What is a market trend? First, what is a trend? A trend is simply the direction the market is moving over time. When prices make higher highs and higher lows, that's an uptrend. When prices make lower highs and lower lows, that's a downtrend.
Why trends matter for investors and traders. Trends are like the current in the ocean. Ride it right and you go far. Investors use trends to decide when to buy, sell, or hold. Uptrend equals buy or hold, downtrend equals take profit or reduce exposure. Example, if a stock has been making steady gains for months, it shows buyer confidence. If it's falling continuously, sellers are stronger. How to spot a trend. Basic signals. There are simple ways to identify trends without being a pro. Moving averages. If price stays above the moving average, gives uptrend. If price falls below, gives downtrend. Higher highs and higher lows, support and resistance zones. These are not magic, but they help you see what market participants are thinking.
Common mistakes and how to avoid them. Too many traders make these mistakes. 1. Chasing the trend too late. Buying after a big run-up can cause losses if trend reverses. Ignoring trend changes. Markets don't go up forever. Be ready to adapt. Tip: use stop losses to protect your capital. Always plan your entry and exit. Trends help you understand where the market might be headed, but they are not guarantees. Summary points: trend equals direction of price movement. Uptrend equals buyers dominate. Downtrend equals sellers dominate. If you learned something, hit like and subscribe for more investing tips. Comment below, what trend tool do you use?